Hello again, everyone. I am Raj Malhotra, ITPM Senior Trading Mentor. So obviously there's been a lot on my mind, so let's get right to it. So all my followers know that my early call was that Trump's tariffs by week's end, there would be a universal 10% tariff or something similar with all the countries that matter, except, of course, China. And as you probably know by now, that's pretty much exactly what happened. Now, that became even more obvious to me when we saw what happened with Israel. So as you know, Israel is one of the U.S.'s closest allies. And everybody would say that Netanyahu left an agreement without an agreement, but I knew that was definitely unlikely. In fact, I bet you Netanyahu was told by Trump what would happen, but he was told to say nothing or else, he was in trouble. So, but think about this. Think about the original poster board of tariffs that went into effect last Wednesday. What a logistical nightmare that would have been if you're the tariff collector. 62% here, 41% here, 12% here, 27% here. That would be impossible to police. There's no way they could do that. I would personally love that job. I mean, think about how rich you could get because nobody would ever be able to track any of those rates properly. You think if it's corrupt now being in Congress, imagine that job. So the other thing, though, that Trump hasn't announced, which I'm pretty sure is going to happen soon, is that Trump will now demand every country to promise not to increase trade with China while they're being isolated or help China in any way. Now, this is going to be some typical Trump announcement, like if you're in bed with China, 125% tariffs or higher. Who knows? But the plan is clear now that it's been intended to isolate China, and everybody else has to follow in line, or else these 10% tariffs we have now are going out the window. It's going to get much worse. And he knows now he can push these countries. You're also going to get in the next couple of months, Trump's announcing deals with individual countries, with all the leaders and photo ops in the White House. All that's going to happen next. So one thing, I never bought into this notion that tariffs were going to drive Europe into China's arms. Europe's been crowing for years about how they need to help Ukraine and isolate Putin. You think Europe was really going to partner with China, who's been explicitly helping Russia and helping them fight Ukraine and by extension, Europe? No way that was going to happen. So a lot of this was noise, and I hope you guys filter through that noise and think about that next time you have these events. Think critically of what could actually happen. Now, having said all this, this price dislocation has really created some good opportunities on both the long and the short side, in my opinion. So let's start with the sector I like on the long side, which is cybersecurity. You know, all tech has been beaten up in this downturn, but cybersecurity has actually done better than broader tech. Look at this chart here. If you look at the CBR, this is the ETF of a basket of cyber names. So it's now about flat year to date after today's big move. And compare that with the Qs here, which is down close to 10%. So even if we are in an economic slowdown, the last place any company CTO is going to cut back on is in cybersecurity. I mean, think about this. An economic slowdown is obviously bad for a company, but a cyber attack can literally end a company. So there is no way they're going to be cutting spending there. So just because, even if the S&P was in a bear market, that doesn't mean that bad actors and hackers are going to slow down and give companies a break. No way. In fact, it's likely the opposite. There is no pause on hackers trying to hack companies and demand ransom. And also geopolitically, think about this. There is a real tail event possibility here. Now, I'm not saying that this is going to happen for sure, but thinking about a tail event, this is something that could happen. So China right now is clearly on the ropes due to the U.S. tariffs, and they're being isolated, as I said. And they have admittedly enacted heavy tariffs originally to try and crash the U.S. stock market. That's well known. They were also clearly dumping treasuries and trying to crash the treasury market. Now, none of the idiots on TV talking about bond vigilantes causing Trump to change course. No, that wasn't that. It was the Chinese were trying to crash the treasury market. And if it gets really bad for the Chinese economically, could they actually go the nuclear option and launch a large-scale cyber attack on the U.S. or maybe the rest of the developed world? I mean, think about this. Similar to what they did weaponizing a virus like COVID, could they do the same thing with a cyber attack? I mean, we know they are clearly capable of it. And if that happened, what would happen to the amount of money spent on cyber? Probably the biggest bull market ever. Now, I like a few of these cyber names, but one name in particular I like is Zscaler. So this company, if has had some serious momentum in the enterprise consumer cohort. Unlike some of its peers, it's actually profitable, but it's still growing at a very solid rate. Zscaler recently raised guidance, and their last earnings report showed really high business confidence. And you can't really ever tariff cybersecurity companies, even if governments try to, versus goods. As you know, they don't come to report. It's just a business service. And businesses worldwide outside the US, they're not going to settle for subpar non-US competitors because, again, cyber attacks can literally end a company. So, and Zscaler is, if you look at their pay rates, they're getting higher rates than than some of their competitors, and for good reason. If you look at their new GTM model, it's been effective and it's led to increased deal activity. Now, the stock's not cheap. It's trading around a mid-50s PE, but it's very justified in my opinion. And the stock is now up about 10% year to date. So it's clearly doing better than its competitors, and that's for good reason. So with or without a market turnaround, I think Zscaler outperforms. So for structure, I generally like looking at a calendar ratio spread here to get exposure to earnings in June. Look here, you could buy 3 of the June 200 calls and sell the May 220 calls 2 times. As you can see here, you could pay around $4,750 for the spread. So if the May call goes out worthless and then stock goes to 2024 highs, around $265 a share, you'd make a 3.14 to 1 risk reward. Now, even if your timing is wrong, and since you are long more option than you're short, this trade will still be profitable. So if you're looking at tail risk to say a cyber attack, like I mentioned, I think there is a good setup here. Because remember, if there is one, Zscaler could easily approach its all-time high back in 2021 when the stock traded around $350 a share. Now look here, this is literally the trade I put on Wednesday morning as I was preparing this video. Obviously, things have moved after the 90-day pause announcement. However, if I had no position and was looking for a tail trade in Zscaler, I would look to buy the June 270 calls. If you paid $1.15 for these calls and the stock went up to $300, you'd make $124,000 on a $5,000 spend and make over 25 times your initial spend. Now, if the stock went to 350, again, like right near its all-time highs, you'd make 339,000 or 68.6 times your initial spend of $5,000. So obviously, that would be a that kind of trade can make your portfolio for the year. On the short side, there have been stocks that have been steady or even rallied since the April 2nd Liberation Day. Some of them are perceived as defensive, and that's why they rallied, because they should do well in a recession. Now, some of these moves, in my mind, are just unjustified or just plain wrong. One such name is Coca-Cola, ticker KO. Everyone knows what they do, but before Liberation Day, Coke was struggling with stalled volume growth and margin pressures. And now with baseline 10% tariffs, these things don't change. If you look at the business mix, Coke has over 60% of its sales from outside the U.S. There is literally no argument that the events of the last week will increase international sales. I'm not saying it'll be negative, but at best case, it'll be flat. And there are some other potential negative catalysts. One negative catalyst is that HHS Secretary RFK Jr. He supposedly wants to ban sugary drinks from the U.S. food stamp program. Now, if you look into that, sell-side analysts thinks that this could potentially hurt revenues by 3%, but I think more just because of the switching out of drinks out of people's diet. Now, there is a narrative that Coke should do well in a recession, but if you look back to history, history does not agree with that. In 2020, when the initial days of COVID, the S&P dropped 30%, Coke dropped 40%. Now, you think back to COVID, why wouldn't consumers buy and hoard Coca-Cola if they were on permanent lockdown? If anything, Coke should have outperformed the S&P 500. In fact, as I said, it massively underperformed. So that narrative that Coke should outperform a recession just isn't true. And Coke is still trading at a significant premium to the rest of the market, even with low to no growth. All this just doesn't make any sense to me. The good news is, if you do want to put on a trade, you don't need a big move to get a really good risk reward in this name just because vol is low. Earnings in Coke are on April 29th, and I do want exposure to that. I like buying the May 70-60 vertical put spread. Now, the stock was trading below $60 a year ago. And FYI, over the same period, the S&P is up just a few percent, even with a big move higher today. Now, I could easily see Coke retrace that move in a recession or just due to the catalyst that I mentioned. Or Coke could just sell off just because the market sells off. If you look at the spread, again, it would cost $1.80 per spread. So you could potentially pay $1.80 to make $8.20. And again, it's not that big a move going from 70 to 60, just a little under 15%. And if you put that trade on, that's potentially a 4.55 to 1 risk reward. So if you risked $5,000 and made close to $23,000, that would be like the new ad campaign, the best Coke ever. So with that, guys and girls, I'm Raj Malhotra. Happy trading. I'll see you on the other side.